try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We got to add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the government has been bigger. Hey guys, what's going on? Jeb here, and in today's video, we are going to be talking about the major correction that took place on Bitcoin over the weekend. As you've probably seen, Bitcoin dropped beneath a critical uptrending level of support, and that uptrending level of support looks a little bit like this. As you can see, Bitcoin actually capitulated beneath this uptrend, and as we speak, is potentially rejecting off of the bottom of this uptrend. This is what is known as an underside test of a level of support, and this is how you turn a level of support into a level of resistance. And this is extremely important because when we zoom out on Bitcoin, what you will find is that Bitcoin finds itself in the exact same position as it was right here in May and April of 2022. Seemingly, Bitcoin could be primed for a drop back down to the 200 weekly moving average, and today we're going to discuss whether or not that is about to take place or not. We're also going to be looking at some very important metrics having to do with liquidation, and we're also going to be looking at the inflows of the Bitcoin funds. As you can see, we've had a large amount of outflows coming out of the Bitcoin ETFs over the course of the last week. We've seen almost $2 billion flow out of the funds. So when are we going to start to see inflows coming back into Bitcoin? That is one of the questions that we're going to be discussing today. If you enjoyed today's video, make sure to hit that like button and subscribe to the channel. My name is Jeb McAfee. I've been working in the cryptocurrency space for almost a decade, and I love teaching you guys about investing and trading in Bitcoin and altcoins. And today, that's exactly what we're going to learn more about. So let's go ahead and give a quick shout out to our community, and then let's get started. Able Gaming 24 is in chat. Good to see you. Professor Mick is in chat. Said good morning. Hyper Mix Big Biz is in chat. Entrepreneur for Life 28. Pew Pew Poom. Jared Reyes is in chat. Jarmel is in chat. Good to see all of you guys. Really appreciate you guys being here. But hey, without much further ado, let's go ahead and dive right on into it. How's everybody's weekend? How was your weekend? I had a great weekend. We had a lot of fun. Really excited to jump on into things. All right, so Bitcoin, as we can see, is currently trading at about $88,000. When it hits 88, you're going to see some serious stuff. Who knows that movie reference? Obviously, hopefully all of you. If you don't, then you need to go and you need to watch Back to the Future. Anyway, Ethereum is feeling like we are having a little bit of Back to the Future action going on because for about the 30th time in its history, it is trading at $3,000. Our favorite stablecoin Ethereum sitting at $2,916 as of today, down 9.24% over the last 7 days. That said, we are actually going to talk about ETH a little bit later because I am quite happy about the fact that Ethereum is getting down close to its 200 weekly moving average. The 200 weekly moving average is an incredibly important level of support that you oftentimes see markets fall back to. And in general, when you see a market fall into this level, it's a good time to be loading up on that market. And there is a very real possibility. In fact, I think I just saw someone in chat say it looks like a massive, yes, exactly. There's a large head and shoulders pattern building right here on ETH. Could this end up causing Ethereum to rally dramatically higher? Yes, it absolutely could. We are very low on our weekly chart RSI here, as you can see. We're probably not done correcting, but we have dropped quite substantially to the downside here. So we're going to talk about Ethereum a little bit later as well. Tether is sideways. Man, when is Tether going to break out of this trading range, guys? I'm sorry, I had to do it. You know, the first April Fools on this channel, I made a Tether price prediction. And the amount of rage comments I got was hilarious because people really did not realize that it was an April Fool's joke. We predicted that Tether was going to go to $10 like 7 years ago. Why hasn't it done that? Who knows? Because it's a stablecoin. Binance is sitting at $872, down 5.61%. Always remember, the thing about Binance that you have to remember is that it is almost the stock of Binance, the exchange. I mean, it's not. There's a lot that's built on the Binance Smart Chain. But at the end of the day, it's got the Binance moniker on it. And so as Binance, the exchange, grows, it only makes sense that Binance Coin is going to grow as well. So if you believe in the Binance exchange, Binance is not a bad altcoin to consider. XRP is down 3.4% in the last 7 days, sitting at $1.91. Solana is at $123.4. 1234, down 7.64% in the last 7 days. Here's something that I want to remind you of. Bitcoin is likely not just going to drop forever. I mean, there's going to be a bottom at some point, and I do think that we're getting closer to that bottom than to the beginning of this correction. And I do think that you're going to see that reversal at some point soon. We do need to talk about the possibility of this bear market sending Bitcoin back down to Bitcoin's 200 weekly moving average, because ultimately that is a very high probability setup. But I do want you to understand that conviction in Bitcoin's long-term fundamentals remains remarkably strong. And so as we dive into the technical analysis here today, I want to start out by reminding you why we are investing in Bitcoin. The reason we're investing in Bitcoin is because this chart right here, flipped on its head, is the devaluation of the dollar. Gold this morning is trading at $5,100 an ounce. And at some point, what's going to end up taking place is you're going to have this huge rotation out of gold into other markets. And that may not happen for weeks or months. It might not even happen for a year, but at some point it will happen. And there will be a large rotation. And you will see that large rotation spill over into other markets, and it will end up being very good for Bitcoin. So let's go ahead and dive on into some technical analysis. Really excited for you guys to be here today, and I am very much looking forward to it. Are you excited for the bear market? Are you excited for Bitcoin to drop lower? Because I am. I actually really hope that Bitcoin drops down towards that $55,000 to $60,000 level. I would be so thrilled if Bitcoin did that. And as you can see here, that is basically the exact time frame that we're in right here. When you look at the length of the bull market, it is almost always 1,050 days. This bull market was 1,050 days. This bull market was 1,070 days. This bull market over here was 1,070 days. And then this market was a little bit shorter, I want to say, but I think it was right around there, 750 days. So this was an average length bull market, which means that it makes sense that we're in a bear market right now. And we don't want to bet against the trend until the trend bets against us. We want to stick with the trend because the trend is our friend until it ends. And right now the trend is bearish. The trend is a bear market, and we are in the exact same setup that Bitcoin was in back over here. We've got our smiley face of doom set up right here. The smiley face of doom is pointing at Bitcoin returning back down to the 200 weekly moving average. And so what do we make of that? I want to talk a little bit about the 200 weekly moving average because it is an incredibly important level that Bitcoin is eyeing right now. And the reason that I want to talk about it is because it is a level that you've seen play out as being important in the stock market for over 100 years. And we're going to dive right on into that. I do want to give a quick shout out before we go any farther to the sponsor of today's video, which is my big lovely face. No, I'm just kidding. iTrust Capital is sponsoring today's video. Here's why you ought to sign up for iTrust Capital. You want to make money, don't you? Well, the best way to make money is to stop paying so much money in taxes. I hate taxes. I cannot stand taxes. I really don't like taxes. Do you like taxes? Who likes taxes? I don't really like taxes. Taxes, it is this percentage of our income that we hand to the government, and we say, government, somehow you are better at wasting this money than me, so I'm going to give it to you to light it on fire. I don't like taxes. Okay, so because I don't like taxes, one of my investing philosophies is to pay as little money in taxes as possible legally. Keyword legally. We don't want to get Al Capone, right? iTrust Capital is going to help you do that because iTrust Capital gives you access to IRA products right here in crypto without having to purchase the ETFs. You can buy spot Bitcoin and Ethereum, XRP, all kinds of other cryptocurrencies in an IRA. Now, what is an IRA? Most of you probably know what an IRA is, but if you don't, basically it's an account that helps you pay less in taxes, either by deferring the taxes and you don't pay them now and you pay them in retirement, or paying them now and the account grows tax-free. So if you sign up and get a Roth IRA through iTrust Capital, you can pay the taxes now, and then your Bitcoin can grow tax-free so that when you withdraw it after 59.5 in retirement, you don't have to pay taxes on the capital gains of the Bitcoin, which is incredible. Combining no taxes on Bitcoin growth, oh my goodness, talk about a wealth building engine. So if you have not already, make sure to sign up for iTrust Capital. Go to the link in the description box down below, or go to iTrustCapital.com/go/crypto-jeb, Sign up today. All right, let's talk a little bit about the 200 weekly moving average. There is a very famous quote from a guy named Charlie Munger. And that quote goes a little something like this. If all you ever did was buy high-quality stocks on the 200-week moving average, where are we going? Instagram. If all you ever did was buy high-quality stocks on the 200-week moving average, you would beat the S&P 500 by a large margin over time. The problem is few human beings have that kind of discipline. The reason that Berkshire Hathaway sits on $380 billion of cash right now, and that's only 30% of their account, of their position, is because Munger and Buffett got very good at buying good stocks, great stocks at good prices. That's the whole investing philosophy. How do you find great stocks at good prices? But yeah, we're not talking about stocks. Okay, how do you find great cryptos at good prices? Well, there's two things that you do to achieve that. The first thing you do is you do a mountain of research and you understand the way the world works. We understand that Bitcoin, regardless of what its price is doing, whether it's at 15,000 after having dropped from 69,000, or whether it's at 3,000 after having dropped from 20,000, is incredible technology because it packages scarcity on the internet. You can't do that with gold. You have to have trusted intermediaries. You can have someone sell you fake gold with an alloy in the middle of the gold that weighs the same as gold, and you won't know unless you cut it open. Who's going to cut open their own gold bar? It's very difficult to travel cross borders with gold. Gold is moonshotting right now because of its scarcity, but it's not going to be the only asset that moonshots because of its scarcity, because Bitcoin does everything that gold does, but it does gold better than gold. And so when you zoom out over the last 10 years, Bitcoin has appreciated versus gold. And that is a trend that is most likely going to continue over the course of the next 10 years. And so if we can look at Bitcoin and we can say Bitcoin is gold, but better than gold for its store of value and scarcity properties, then that means that we have found our quote-unquote great stock. But how do we find the good price? If you look at the long-term history of Bitcoin, you will see that every single time that Bitcoin has dropped back down to the 200 weekly moving average, which, by the way, has happened in every bear market. By the way, we are in a confirmed bear market now with every single technical and fundamental confirmation of a bear market that we need to say that we're in a bear market. Every single bear market has dropped Bitcoin down to at least the 200 weekly moving average. It stands to reason that the exact same thing will happen at this point in time. Remember what Munger said. Munger, by the way, has more money than you, me, combined times a million. The dude, when he passed away, was worth, I think, $2.5 billion, right? This is absolute investing gold, absolute investing Bitcoin. We got to change the wording, right? It's not gold, it's Bitcoin. That's Bitcoin. I mean, that's a little bit weird, right? You walk into the club and you say, man, that's Bitcoin. No, that sounds a little weird. We got to popularize that. But this is good advice. This is financial advice. It's not from me, it's from Munger. It's true. And I know a lot of people don't like Munger. A lot of people don't like Buffett. Oh my gosh, they don't like Bitcoin. I get it. They're just old and wrong. I love Munger and Buffett and their investing philosophies, but they're just wrong about the new technology. But the idea of buying a great stock or a great crypto at a good price, that is how you make money. And so what a lot of people don't want to do is that up here at the top, they don't want to part with their Bitcoin, right? They don't want to part with it. They don't want to sell it at the top because they're greedy, right? And then what ends up happening is that when it goes into a bear market and it drops back down here towards the 200, they don't want to acquire it because that stuff's dead. I'm not selling. It's going to $1 million. Who's ever heard this before? I'm not selling. It's going to $1 million. I'm not buying that crap. It's dying. That's literally what these respective bubbles mean. I'm not buying that junk. It's dead. That's what the difference is. Literally, if you just do the inverse of what fools do, you will make money. So let's just prove this thesis. Does the 200 weekly moving average work? Well, even before we look in the stock world, because the 200 weekly moving average is a 4-year moving average, like we kind of got to look at the stock world to see if it holds true. But we can look at it on some crypto charts because some crypto charts are old enough for us to actually have data. You need at least 10 to 12 years of data to see the 200 moving average and whether it works or not. But here's the 200 moving average on Ethereum. We drop back down to the 200 right here. That was an excellent time to buy, yes? Excellent time to buy, yes? Right? You see? Even down here, was this a great time to buy? Wasn't bad. I mean, the market did drop farther, but honestly, you would still be up. If you had bought exactly a year ago, you'd still be up 20%. Up at the top, you'd be up 128%. Ethereum is doing the same bit right now. It's reverting back down to the 200 weekly moving average. Now, wait a second. Let's look at cryptocurrency stocks. What is MicroStrategy doing right now? It's sitting right here at its 200 weekly moving average. If you think MicroStrategy, if you think strategy, not MicroStrategy, it's not strategy anymore. If you think that strategy is a great stock, well, it's at its 200, right? Okay, let's look at some other examples. QQQ, Invesco's QQQ tracks the 100 largest tech companies in the U.S. stock market. You can see all these times right here, right? All these moments right here. Obviously, we fell through it here. But over the last 15 years, that was your buy signal, the 200. You see this? When you get in shooting range of the 200 moving average is when you buy good stocks. You look at the S&P 500. Same exact thing. The 200 moving average was an excellent time to acquire stock. Look at Google. Same thing. Excellent time to acquire stock. If you take one thing from this video today, it is that you should always be in a position to accumulate at the 200 weekly moving average. All you have to do is buy the Bitcoin at the 200 weekly moving average if you get there. If Bitcoin drops back down to the 200 weekly moving average in this range, you buy. It's very simple. It's just that simple. Jeb, it's not rocket science. Buy in the fall 11 months after top every time. Exactly. And that's another thing. We're talking about these cycle dynamics. Bitcoin has blessed us with extremely, how do I say this without someone making a double entendre joke in the comment? Bitcoin has blessed us with, you know what I'm trying to avoid saying. Bitcoin has blessed us with very normal 4-year variations. Like let's not call it regular cycles, right? Bitcoin has blessed us with being very predictable. There's the word I'm looking for. Predictable. Very predictable cycles, right? Bitcoin has blessed us with very predictable cycles. And as Pew Pew Poom just said in chat, it's the same bit. You buy about a year after the all-time high, right? After the all-time high down here, 11 months, as Pew Pew Poom just said in chat, 11 months later, you would have bought not exactly the bottom, but close, right? We were about 13 months after when we hit the bottom here. Same thing here, after this all-time high. Exactly 1 year later, 12 months later, you buy the bottom. Back here in 2022. About a year later, you buy the bottom. So what I want to see happen is I want to see Bitcoin spend basically the next 6 months dropping down towards $40,000 or $50,000. And there's a very real possibility that it's going to drop down towards that $50,000 to $60,000 range right here on the 200 moving average. Now, Jeb, you might say, wait a second, Jeb. We broke through the 200 moving average last time. What gives there? Bitcoin was significantly more parabolic then than it was here. This was a more linear growth. This was not as much just blow off top parabolic. This took its time, right? This rally took a little bit longer. We spent a lot of time trading sideways. And so I don't necessarily expect that Bitcoin, in fact, I'd be really surprised if Bitcoin just fell straight through the floor as we did last time and Bitcoin drops 74 to 77%. I don't necessarily think that's what's going to happen, but a Bitcoin drop on the order of 53% can happen. We live in this echo chamber, and we think that Bitcoin can't drop 50% because Bitcoin's mature now. Anything can drop 50%. QQQ, NASDAQ 100, dropped 38% 2 years ago, right? It can happen. It really can. So we need to be careful about our biases. If I inverted this chart and I told you that we're going to go to the 200 weekly moving average, you would say, yeah, that's exactly what's going to happen. We've got the smiley face of doom pointing us in that direction after all. And so if the smiley face of doom is pointing us in that direction, then we need to take that seriously. And so if the 200 weekly moving average is an excellent place to buy Bitcoin, which it is, then are we going to go there? So let's just reiterate. We've got our smiley face of doom. Let's just have a smiley face of doom in the chat. Everybody say smiley face of doom. We have our smiley face of doom. Smiley face of doom and terror. He's got eyebrows. Let's give him eyebrows. Maybe a little top hat. Let's give him a top hat. Boom. Now he's classy. And this one over here, let's give him a party hat. Give him a party hat. You got to have fun with it, especially in the bear markets when there's nothing. So the smiley face of doom is pointing us towards the 200. If you remember anything from this video, just remember that the smiley face of doom is pointing us towards the 200 moving average. And the other issue with the smiley face of doom is that the smiley face of doom has bearish RSI divergence because he's wearing, it looks like he's wearing sunglasses, right? You got your bearish RSI divergence. Come get your bearish RSI divergence. You see it right there? That is a doom smiley. That is the technical term, guys. That is a smiley face of doom. Smiley face of doom and justice. So watch out for the smiley face of doom. Anyway, smiley face of doom points us towards 200 moving average. But the smiley face of doom also has his little nose or whatever over here. And that is this bear flag where Bitcoin rallies up to the 50. Here's the issue. Bitcoin just did that. You see? You see how the smiley face of doom is playing out again? It's happening, guys. We're right here. So basically, from a technical analysis standpoint, we now have about as concrete evidence as it gets that Bitcoin is going to go down to the 200 moving average. So what we now need to do is that we now need to disprove or prove that thesis. Is there any reason to believe that Bitcoin won't go down to the 50 moving average? There's only one, in my opinion. Because right now, and here, let's start with this. Here are all the reasons to prove why Bitcoin should be going down to the 50 moving average. Number one, it's actually the bottom of the Quantile bands. If you guys follow Plan C over on X, it's right there at the bottom of his Quantile model, which is phenomenal, by the way. Let me see if I can pull that up. Plan C Quantile model. And I think that because of everything I'm about to say, I think we're actually going to probably see a reversion back down here. This is called the Quantile model. A friend of mine, the real Plan C, over on X, as you can see today. Guess where the 1% Quantile model is? You can see this is a model. He spent thousands of hours working on this. It's absolutely phenomenal. I believe that this is, let's see if this is the most up-to-date one. He's probably, because he updates it every little bit. Let's see if I can find a, if not, I'll just go back to that one. See if there's been a post on it recently. Because if not, that's okay. We can use that one. It's just a couple months out of date, but it doesn't make too much of a difference. It's only going to make maybe $1,000 difference. Looks like not. So let's go back to this Quantile model. So this is only 3 months ago. So this is still pretty accurate. You can see at the time Bitcoin is sitting right up here in the middle in like that 50 in that premium area. Guess where deep value is? Between 1 and 20. You fast forward this a little bit, these numbers are a couple $1,000s higher, but right now the Quantile model would most likely be, because the price is not 113 right now, it's a little bit lower. Where we'd likely be looking at the very bottom of the Quantile model being around 53,000. Didn't this model break last cycle? No, that was the stock to flow ratio, which the stock to flow model has been flawed from the start because it has predicted a 10x on Bitcoin far too quickly. That'd be the stock to flow model. Stock to flow model did break, and I have not covered the stock to flow model seriously on this channel for probably 5 years. We used to look at it a lot, and it was helpful. But right now, based on stock to flow, we should be at like 1 million. So, no, we're not looking at stock to flow. This is Quantile. If you guys have not followed Plan C, highly recommend his content. Extremely good X account. Love this guy. We talk a lot over in messages and everything. But this model is really good. It's very, very good. I'm not going to get into how it works right now. But the point I'm trying to make here is that the bottom of this model, which would agree with all of the other bottoms that we've had on Bitcoin in history, is around 53,000. Now, Plan C is very vocal on X that he does not believe that we're going to go down to like 30 or 40. I don't think he necessarily personally thinks we're going to go down to 53. But using his model, I honestly think we probably will, right? If we have the Quantile model, I'm not going to be able to just draw it very easily on the chart here, but it is kind of close to logarithmic, but it's different because it's Quantile. So this is not the exact bottom of the Quantile model, but this is roughly the bottom of the Quantile model. If you were to do this, and then you were to actually kind of do this, I'm just kind of making a really poor rendition of it on the chart here. But this is basically these are basically the bottoms here. The bottom of the Quantile model right now is probably around like 53,000. So you give it out until about, as Pew Pew Poom talked about in the stream chat, you give it a year, and that bottom's probably up there around 55 to 60. So 50,000 is a little bit low. I don't necessarily think we're going to 55,000, but what I do believe is that that model is going to be very helpful in the future in detailing when you buy Bitcoin on the discount. And again, this is a couple months out of date, so he updates it every month or so on his page with the new values for the bottom, like one being the lowest that Bitcoin would likely ever go 5 years from now. So actually, we can look 3 months. This was about 3 months ago. So right now it would be at about 55K. So that is down in that deep value territory. Right now we're in that discount territory, right? And this makes a lot of sense. And so, can Bitcoin break bearish out of here? Yes. Although I will say this, I do think that Bitcoin is probably closer to the bottom than the top, or about equidistant from the bottom to the top, probably a little bit closer to the bottom than the top. Because we have this top up here, we have the bear flag. The bear flag points us down. Guess where the bear flag's pointing us is at the 200 weekly. It's really not that complicated. And we have this tendency as analysts to try to justify why the thing that makes the most sense is wrong. Like when I read the Bible, it's extremely important to just take the surface meaning. We can try and read into things, and what ends up happening if we're not careful, then we get into the doctrine of man rather than the word of God. In charting, we have an opinion that Bitcoin could not possibly go down to $60,000 because that would make no sense. And actually what it is that all of the fundamentals and all the metrics say it's going to happen, but we emotionally cannot digest and do not want that to happen. And so what ends up happening is that we're staring the smiley face of doom in the face and we're ignoring it. And that's dangerous, because if you are a real investor and you're serious about what you do, you've got to consider that this is very much something that could happen, right? By the way, we also have the 300 moving average, which is what Bitcoin actually bottomed out at right down here before FTX dumped us down here below for a little bit. I think we could all agree that this was remarkable buying territory. If we drop down here below $50,000, I will borrow as much money as I possibly can. I don't even care the interest rate, and I will buy the crap out of Bitcoin. This is deep value territory if we get down here. So if Bitcoin has always dropped down to these levels, the 200, and then even on a wick down to the 300 for a couple of days, why in the world would that not happen again? Oh, well, gold's rallying. Well, you're absolutely right. But what we've talked about recently is important here. The gold rally is following something called the gold to stock ratio. I'm going to try and find this chart again. The gold stock ratio. Gold is not necessarily done. We've been saying that a top is coming on gold. But here's the problem. We have no idea when that is. And I'm not going to sit here and make myself look like an idiot and mess you up because I'm going to try and call a top on gold. I'm not doing that. I have no idea where the top is on gold. I've said that gold would probably make sense to go to $10,000 by the end of the decade. By the way, you know why gold's rallying? A friend of mine over on Twitter, Caleb Franzen, was talking about that as well. Big shout out to Caleb Franzen. We've had him on the channel. He's gotten a lot of attention lately for comparing, somebody just mentioned the Japanese yen. He's gotten a lot of attention lately for comparing the Japanese yen to the gold chart, to the gold and silver chart. Let's see if I can find his chart on this. Was fantastic. Where is it? It's around here somewhere. He's gotten a lot of attention for it, and for good reason. It's a very good call. Here we go. Gold versus Japanese bond yields. Look at that. Look at this. I've been telling you for a long time, the unwinding of the Japanese carry trade is a big part of the reason that gold is going para-frickin-bolic. 2 seconds on the Japanese carry trade. Okay, so for a long time, let me figure out what the ticker is. For a long time, the Japanese have Japanese yen yield, JGP. Let's see if I can pull this up. Nope, it's not in crypto. Let's see. JGP. For a long time, the Japanese yen, I'm going to try and find this while I talk. For a long time, the Japanese yen has been, here we go, TVC JP10Y. There we go. For a long time, the Japanese yen has been near zero, the 10-year bond. And so what people would do here on the Japanese carry trade is that you could borrow money, and you could actually get paid to borrow, because for a few moments here in history, there was a negative interest rate on the Japanese yen, which meant you borrowed and you got paid to borrow, which doesn't make any sense, but that's exactly what happened, right? You could borrow in Japanese yen, take your little car here and ride it to the moon, right? And then you would buy something else. And this was called the Japanese carry trade. The Japanese government was more or less financing you buying anything that went up in value in the rest of the world. Because if you could borrow at 0% interest rate and you invested in anything, you make money. That's called a carry trade, where your borrow rate is lower than your appreciation rate and you skim the difference, right? If you can borrow at 6% and you can make 12%, then in theory, if you can maintain, if you can service the loan, in theory, you make 6% in profit. The Japanese carry trade is unwinding because the yen is exploding in interest rates because people are tired because of hyperinflation concerns in Japan. And so for the last few years, you've seen the yield on the Japanese yen skyrocket. It's absolutely moonshotting. And as Caleb Franzen most astutely pointed out, it tracks with the gold rally identically. People are terrified of the rampant devaluation of fiat currencies, and they're being scared because of what's going on with the Japanese yen, seeing its rate moonshot like this, and then what they're doing is they're aping into gold. So there is an overall fear in the market, and let's tie all this back to Bitcoin and why the smiley face of doom comes into this. There is an overall fear in the market of hyperinflation, and there's an overall fear in the market of fiat currencies. But that fear is not yet, anyway, being directed towards Bitcoin. It's being directed towards gold. And that's why gold is exploding, because people are scared of bond yields. They're scared of the unwinding of the Japanese carry trade, and they're scared, ultimately, of fiat currencies. And that is why they're buying gold hand over foot. And I couldn't find it quickly, so I'm not going to bother right now. But there is a ratio called the gold to stock ratio. Basically, the market capitalization of gold versus all stocks. And gold is nowhere near a high on the gold to stock ratio. The gold stock ratio, which I'll try and find in between content here, we could easily see gold go to $10,000 an ounce. I don't know where the top is. I don't know if it's 6,000, 7,000, 8,000, 9,000, 10,000, but I have gone on record and I've told you a bunch of times it could be as high as $10,000 or more. I don't know where the top is. As we get higher, it becomes less of a good idea to buy because the risk to reward ratio is just not there. We are now almost off the charts on RSI. We're at 95 on monthly chart RSI. That is like face-melting Temple of Doom kind of terrifying levels of RSI. If you open a short trade on gold and you're able to service it somehow, God, somebody, I'm not saying you should do this because it's very high risk, but somebody is going to time the top on gold and they're going to short it and they're going to make $1 billion. It's going to be the big short all over again. But so here's the thing. We don't know how long gold will just melt faces like this, but it could easily do it for another 6 months for Bitcoin to finish out its bear market. Easily. It could easily take 6 months for gold to finish melting faces, cool off, and then at that point in time, Bitcoin could be down here. Gold just finished its bull market, but people are not done being scared of fiat currencies, and what do? Smart money follows Buffett. Smart money follows Munger. They don't always agree with Buffett and Munger, but what they say is accurate. If you end up coming down here towards the 200 and gold's at an all-time high, that is the entry of a generation. That is an easy 18x from 60K all the way up to $1 million. Easy. And so accumulating Bitcoin down here south of 75,000 is a very good idea. It's an extremely good idea. That's why Strategy just acquired another 3,000 Bitcoin today. Another $300 million, $270 million worth of Bitcoin accumulated. Bitcoin is some of the greatest savings technology that mankind has ever invented. But all that said, it is foolhardy to not consider the possibility of Bitcoin dropping down to $58,000 to $60,000, maybe $65,000, $70,000. If we do drop down to those levels, you should seriously consider them as entries. Now, let's take a look at the shorter term timeframes, because now that we have all of that context, because the long-term context is extremely important to understanding what's going on short term. if we look at the shorter term context here, we need to remember that Bitcoin right now is breaking below this uptrending level of support. You can see the bear flag right here. And here's what we're tempted to do. Here's what we're tempted to do. We're tempted to say, oh, well, this uptrending level of support is still intact. That's true. That's absolutely true. But since we've broken this uptrending level of support, what we now have to do is we have to reclaim this uptrending level of support if we want to consider ourselves bullish in any capacity, in any respect. Because what Bitcoin did over the weekend and on Thursday and Friday even, is we fell below this uptrend. We rejected off of it. We did two things. We did an overside, underside test. Here's the overside, there's the underside. And then what we did is that some people are going to draw their lines a little bit different. Some people might have drawn their line like this, right? Okay, let's say you drew your line like that. Overside, underside test. Okay, if Bitcoin doesn't break above this line here, then we're in trouble. All right, so Bitcoin is not in extremely bullish territory right now. It is very much looking bearish. So unless we get some strong signals that Bitcoin's rallying to the upside, you need to consider that lower level. Now, am I saying you should sell right now? No, I'm not saying that you should short Bitcoin. That is not a good idea because Bitcoin is already so far to the downside. We're already 32% down. I'm not saying that you should sell Bitcoin. If you're going to sell Bitcoin, the time to do that was up here. What I'm saying is that if Bitcoin goes down to these levels that we're talking about, then that is where the smiley face of doom actually becomes the smiley face of truth and justice and gives you an incredible entry. Talk about an incredible entry. If Bitcoin does go down to the 200, then that is where you can build generational wealth by acquiring Bitcoin. Because what a lot of people did down here that were wise and had access to capital is they bought a lot of Bitcoin down here. A lot of people even borrowed money and bought Bitcoin down here. And they held, and they were glad they did. Because the truth is, if you had have bought Bitcoin at all-time high 5 years ago, you're only up 20%. You're not feeling that good. But if you had have bought down here at the 200, when we first touched the 200, you're up 286%. Okay, let's go back to June 22nd of 2022 on QQQ. Very good stock. I love QQQ. I own QQQ. Big fan of it. If you bought down here, you're up 124%. So if you bought Bitcoin on the discount down there at the 200, you've done double the performance of QQQ, despite the fact that QQQ is currently at all-time high and Bitcoin's down 30%. If you go back in time a little bit, then what you'll see is that your Bitcoin was up 473%, when in that same time frame, QQQ is only up 127%. So I'm here to tell you that the key to investing in Bitcoin and making a lot of money in the long run is not just buying Bitcoin and forgetting about it. It's also buying it at a good price. This is a great price, right? This is a great price. If you had have bought here, you would have weathered a storm and it would have been 2 years before you broke even, but you'd still be up 116%. Not bad. At all-time high, you would have been up 224%. But you can see how a lower entry makes all the difference. And so how do we find those lower entries? That is the key to what we're trying to do in a bear market. We're trying to see where are those lower entries? Where do we get lower entries? Because that is going to give us a stronger footing for a better return over the course of the rest of this decade as Bitcoin rallies. The strength of Bitcoin is unquestioned. It is the greatest investment in the history of mankind if you are considering it as digital scarcity. That said, you do need to be diversified. You do want to make sure that you have other assets in your portfolio. You do want to make sure that you have steady income and that you have cash to buy the dip. And all of this is important because you want to take advantage of opportunities in the market. Okay, so if Bitcoin does end up dropping down to those levels, are you positioned to buy? I'm positioned to buy several coins, and I'm very excited to do that. And I am excited to see you guys have the opportunity to do that as well. All right, let's read a little bit of chat here. Pew Pew Poom in chat, Limited 2040 said, how long do you think get down to lower targets? So, as Pew Pew Poom pointed out in chat, fantastic call. Typically, bear markets last between about 11 months. That's what he said, 11 months. They can last up to about 14 months until bottom. So we're looking at about 11 to 14 months. So 11 months is about 330 days. That would put us in August. 14 months is about 380 days. That would put us in November. Okay, so we are looking at not the winter, but the fall of 2026. That is when we would be anticipating for Bitcoin to bottom out somewhere in here. But let's get the price right. Somewhere in here. Somewhere in that box. Now, Jeb, that's a pretty tight box. Yes, it is. Are we going to go there? No clue. No idea. If you're subscribing to this channel because you think I know the future with a crystal ball, I'm sorry. You got to go find somebody that reads palms or something, which, by the way, is demonic, so don't do that. But I don't do that. I don't know the future for sure. What I can do is I can tell you what's most likely to happen. I can give you probabilities. I am not here to be your soothsayer and tell you the future. I don't know the future any more than you do or any more than anybody else does. What I do know is that markets operate in a certain way for a certain reason, and they tend to do the same thing over and over again if the inputs haven't changed. We're starting to see quantitative easing, but right now that's just hype, right? Right now, let's be honest. Everybody's saying, Jeb, QE's going to save us. QE's going to save us. QE's going to save us. Like some seagulls trying to get a freaking French fry, man. QE's going to save us. QE is going to help Bitcoin. When it actually happens, you think that is enough to move Bitcoin? This is probably a smaller move than the entire market capitalization of Bitcoin. That's not enough. This is the current level of QE. This is the gigantic amount of QE that took place for the last bull market. Not here, but in 2020 and 2021. This is this, not this. And this only happened because of COVID, right? So, is QE going to help Bitcoin? Yes. It's going to take time, though. You can see they injected $2 trillion into the economy immediately, and it still took 5 months for it to show up. So, the bottom line is this. Bitcoin does not have a catalyst that should stop it from returning down to the 200 weekly moving average. The only argument is that QE is starting. But QE starting is a headline. QE actually injecting hundreds of billions or trillions of dollars into the economy, that actually is what moves the market. The headline of QE starting clearly has not moved the market. Before we start to see trillions of dollars flowing into the economy through quantitative easing, you are going to need to see several months pass. It's not going to happen under Jerome Powell either. He's out in, someone correct me, May, I think, possibly sooner, but I think May is the end of his term. It might be March. I think it's May. And then you're going to have someone new come in, and QE is going to be this is a big boat, guys. It takes years. It doesn't move that fast, and we're running out of time, so I'm going to wrap this out. But the point is, there is no catalyst that I see that should stop Bitcoin from dropping back down towards $60,000, $65,000. I'm not going to give an exact bottom metric. I don't know what the exact number is going to be, but I see no reason that Bitcoin should not follow through on this bear flag down towards a target, hit a bear market bottom somewhere around these two levels. I'd see absolutely no reason whatsoever. I see absolutely no reason whatsoever that Bitcoin should not drop back down towards these levels. None. I see none. And that's going to make me extremely unpopular, but I'm going to tell you what, I am positioned and ready to buy several whole coins if we get down here. And this will be your shot. If this happens, this is not a time to panic. This is a time to be really, really happy. Because, I mean, come on. You tell me that it wasn't a good time to buy when we went down to the 200. Are you kidding me? Plus 7,000%. Plus 2,200%. Plus 300%. Of course it was a great time to buy. So I hope that we drop down there. And if anything, I might even be a little bit biased towards us dropping down there. But what I will say is this. There is a mountain of evidence as to why we should drop down towards those levels. I'm going to read a little bit of chat, and then we got to wrap it out here. If you guys are enjoying today's stream, make sure to hit that like button and subscribe to the channel. Thoughts on Metaplanet? Haven't looked at Metaplanet in a little bit. Let's take a quick look here. Pew, pew, poom. Wow. That's a chart. Geez. Okay. Well, I mean, I would have to look more into their actual acquisitions of Bitcoin. Ultimately, any Bitcoin treasury company that survives, I do actually think is going to do very well. But it has to survive. So it really comes down to that. I'm interested in buying treasury companies after we get a bear market bottom. If Bitcoin hits 200 on the moving average, 200 moving average, that's when I'm saying, okay, maybe we'll buy some treasury companies. But just like with Bitcoin, I want a discount. I don't want to buy unless I have a discount. I don't want to buy unless I have a discount. I try to always have a little bit of DCA going on, but I like to do lump sums at big levels of support because I like to get good entries. I don't like buying all-time highs. It's not something I'm a big fan of, especially in Bitcoin. In the stock market, you can kind of get away with it because the stock market takes like a 20% dump every 6 years. So it's not, you don't have to be as careful about buying all-time highs because oftentimes an all-time high just means you're going to rally for 3 years straight and you will never see that level again if you don't buy it now. But in Bitcoin, that's not necessarily the case. We typically go back down and backtest prior all-time highs, which means why would I buy at all-time high when I could buy at the all-time high when it's a bottom, not a top later? And so if Bitcoin does drop back down to 75, I'm very excited to buy at those levels. If it drops back down to 65, extremely excited to buy at those levels. Guys, real quick, do want to remind you of the promotion going on over here on iTrust Capital. If you guys have not already signed up for iTrust Capital, you're going to get a $100 funding bonus. You're going to get $100 for free because I just love giving free stuff away. It's like my favorite thing to do. If you sign up for iTrust Capital and you actually deposit and fund your account and buy some Bitcoin down here on the dip through your tax advantage accounts, you're going to get a $100 funding bonus. So if you have not already, make sure to sign up for iTrust Capital. Get access to traditional IRAs, Roth IRAs, SEP 401ks. You know what an SEP is? Self-Employment Plan 401k. You don't have a $7,500 contribution limit. The contribution limit is like over $40,000. You can end up investing a huge amount of money into Bitcoin and cryptocurrencies through your IRAs and your employment plans, 401k, rollover employment plans, 401ks, 403bs, TSPs, 457s. You got your SEP IRAs, your simple IRAs, inherited IRAs, etc. Just about every single type of retirement account you can invest in Bitcoin and crypto spot, not the ETF, but spot here on iTrust Capital, and you can get access to all of your favorite cryptocurrencies as well. They've also got the absolute lowest fees in the industry for buying and custodying Bitcoin inside of a retirement account. So if you have not already, make sure to sign up for iTrust Capital. It also helps to support the channel, and you're going to get a special $100 funding bonus when you do so. So make sure to sign up for iTrust Capital with the link in the description box down below. If you enjoyed today's video, make sure to hit that like button and subscribe to the channel and stay tuned for more content because we have so much content we're going to be bringing you during this bear market. Super excited for this, guys. This is when you plant seeds. You get rich in the bull markets, but you build wealth in the bear markets. There was a famous saying that it's not about the goal of a bear market is to survive. And while you're surviving, buy. If you can just survive a bear market and buy those lows on great assets or great companies, you're going to make a lot of money. So I look forward to bear markets. Something is always in a bull market. Something is always in a bear market. It's so tempting to go buy the thing that's in the bull market. But what you have to do is you have to understand these companies, these assets, these commodities at such an integral level that you understand if it's in a bear market, it will come back. If you understand an asset, you can look me square in the face and say, it will come back. I am extremely confident of it. If you're extremely confident that Bitcoin's going to come back, then you should be hoping for a bear market. You should be hoping for a bear market. Unless you're trying to retire right now on your Bitcoin holdings, in which case that's unfortunate, right? But if you're planning on holding even just for a few years more, you should be hoping for a bear market so you can get those discounts because the lower entry is how you get a higher profit when you eventually hit that take profit. So stay tuned. We've got a lot of work that we're going to be doing in the bear market. Very excited to be bringing you content here. And the wise among you will stick around because we are going to build some wealth during this Bitcoin bear market. Very excited to see Bitcoin dropping. And hey, if it rallies, then great. $87,000 is a great level. I hope you've been accumulating at these levels too. 87 to 1 million is a 12x. That's a really good return also. So I'm not saying you should sit on your hands and not acquire here either. These are great levels also. We're 30% discounted from all-time high. That's a really good level. If Bitcoin can go to 126 once, why can't it do it again? It's a good asset. Remember, we invest in great assets so that we can have the confidence that they're going to return. And when we have the confidence that they're going to return, that gives us the confidence to buy the discount. All right. Again, if you enjoyed today's video, make sure to hit that like button, subscribe to the channel, follow me on X at CryptoJeb and at Jeb McAfee. And before I go, to just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.
Oh, I got a real good feeling.